Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstart video for March 8th, 2024. In the Kickstart video, I take a look at the three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. We just had the US jobs report come out in the US with non-farm payroll growing by a greater than expected 275K. However, the prior month was revised sharply to the downside. The unemployment rate also ticked up higher than expected to 3.9% from 3.7% expected. Average hourly earnings only grew by 0.1%, with the year-on-year coming down to 4.3%. They're expecting 4.4%. So good news well, for inflation, it seems like the job growth was somewhat mixed because of the gain this month, but sharp revision last month. And so we are seeing the U.S. dollar actually move lower here in trading. Looking at the two-year yield, it is down minus 7.8 basis points. The 10-year is down minus 3.5 basis points currently at the moment. So let's get into the technicals now for these major currency pairs. Let's get started. Start by taking a look at the 4-hour chart of the euro versus US dollar, and you can see the price came down in the current hourly bar before the report down to the 50% midpoint of the move down from this move to the downside here. That level was this high price earlier this week, which found early sellers, and then in trading yesterday, the market moved above that 50% retracement and surged to the upside, and coming down to retest that level. Before the report, it could have been no volatility, but from pre-market trading, a lack of liquidity. But what we saw since subsequently is a push out to the upside. What we do know is that it technically this bar is not going to disappear. Okay, so technically it looks more bullish, staying above that 50% retracement, and we'll forget about the story about how it happened. Nevertheless, the price did extend above the 61.8% retracement, 1.0969. The next target area would come against these double tops right through here. Those levels come at 1.0998, right around the 110 level, natural level 110. Again, we had a high right here, a high right here against that 110 level. So, needless to say that is setting up as a tough nut to crack on the top side on further momentum. Nevertheless, the buyers remain a little bit more in control in this currency pair, with the 61.8% retracement, but price trading above and below the 61.8% retracement currently at the moment. Taking a look at that 5-minute chart just for giggles. The price in action in today moved to the downside. Here's that spike to the downside off of the initial report that came down to that 50% retracement and then moved out to the upside. Here, breaking above the 100 and 200 bar moving averages. Maybe we come and put a horizontal line here against this high right here. Another thing that you can do is measure sort of the 38.2 to 50% retracement. That high from earlier in the Asian session is between that range right here. That's the range for the day. So maybe look for support somewhere in the 49 to 57 area, with the 55 level as the Asian session high as a level 2I as well. So be aware of that level. Let's take a look at the dollar versus yen next. And again, we'll look at the 4-hour chart. This currency pair has been moving sharply to the downside this week. Why? Because the Bank of Japan seems to be shifting with continued talk today about the potential for a hike even before the wage data is fully known. So what we saw yesterday was that the price closed, can't tell it off this chart, near the 148 level. That was above the 100-day moving average, but as you can see, the price fell below that level in trading here today, and with momentum this time. Yesterday we traded above and below it for most of the New York session, or most of the day actually, and so we're seeing a rotation to the downside and increased momentum off of the jobs report. We did break below the 38.2% retracement of this move to the upside, which is good news for those looking for more momentum to the downside. We're currently trading just below that level at 146.77. The 38.2 comes in at 146.81. So that may be a close barometer, or a level that we're going to need to watch to see if the price can stay below that level to keep the sellers more in control. Now we are approaching a key moving average. That is the 200-day moving average. That comes in at 146.149. And like the 110 level in the euro versus US dollar. We haven't been above that. That level is going to be a key level and probably a tough nut to crack. It's also in between this swing area through here. So again, increasing the support reasons for buyers to lean against that level on a test with a stop, let's say, below the 145.96 level, which is below the 146 level. So kind of like the 110 level in the euro versus US dollar, coming down toward some key support may give buyers slash profit takers an opportunity to lean against a cluster of support, again defined by the 200-day moving average in the swing area between the 145.96 and 146.21 level. Finally, let's take a look at the sterling versus US dollar, and this currency pair is breaking to outside of the 148 level with momentum, and also above the high price. Oops, let's get rid of that. Also above the high price from the month of December, up at the 128.27 level. This 128 to 125.94 level has been home to most of the volume over this period right here. And as you can see, the price moved above that level, tested the high of this swing area, and then got enough juice off the jobs report to extend above the 128.27 level, opening the door for further upside momentum. We have to go now to the daily chart in the sterling versus US dollar to see where we stand in regard to that. And the price even also moved above the high of this next swing area that I had outlined in a video that I did yesterday. That area had a peak of 128.48-ish type area, comes off of different highs and lows through this area, where the market found either support or resistance against this area before moving to the downside. And then we came back up to that area and found willing sellers again and again. And it wasn't until today that the price finally broke above that. So close to support. Now comes in at 128.48. As long as the price stays above that level, the buyers remain in control. There's a lot of open space ahead, but this high right here would likely be the obvious next target for the pair. That looks like it comes in around the 129.90-ish type level, just above the 129.85 level. So be aware of that that target on the top side, and then open road to the 131.42 high from 2023. So there you have it, a detailed look at the three major currency pairs to kickstart your trading day on this unemployment day. My name is Greg Michalowski. Good fortune at your trading. Bye-bye now.